Everyone is watching the same stocks right now: Nvidia, Apple, Microsoft, Tesla. And while there's nothing wrong with great companies, the truth is that by the time a stock becomes a household name, much of the easy upside is already behind it. Historically, the biggest opportunities tend to appear earlier when companies are quietly building inside massive market trends before the headlines catch up. Over the past week, two companies kept appearing in my research because they sit directly inside the infrastructure of the AI economy. Not the flashy consumer side, but the parts that actually make the system work. Today, we're breaking down two under-the-radar stocks benefiting from artificial intelligence, data expansion, and digital transformation, looking at what they do, how they make money, where the upside could be, and where the risks are hiding. This isn't hype, it's real analysis. And as always, this is not financial advice. The first company is Zeta Global, an AI-driven customer intelligence platform that goes far beyond simple digital advertising. Zeta connects massive consumer identity data with real-time behavioral signals and predictive artificial intelligence to help businesses understand who is likely to buy, who may churn, and how to engage customers across every channel, from email and mobile apps to websites and connected TV. Instead of companies guessing about their audiences, Zeta's platform predicts outcomes using billions of real-world data points. Scale matters in AI, and Zeta processes trillions of behavioral signals every month across hundreds of millions of consumers, which gives their models serious predictive power. What's catching investor attention is the financial momentum behind this platform. Zeta has now delivered 17 consecutive quarters of outperforming expectations, which speaks to consistent execution rather than one-off results. Revenue recently grew around 26% year over year, which is strong in a tech environment where many platforms are slowing. Even more encouraging is that profitability is improving faster than revenue. Operating margins are expanding, losses are shrinking quickly, and free cash flow is rising sharply, signaling that the business is reaching scale rather than burning endlessly for growth. The company's cash position is solid, giving it room to continue investing in artificial intelligence and product expansion without financial strain. Zeta is also pushing aggressively into AI automation, rolling out intelligent agents that help companies optimize marketing campaigns in real time. Usage has surged during peak shopping periods, and enterprise clients are reporting meaningful time savings along with strong returns on ad spending. Strategically, Zeta is positioning itself as an AI operating system for customer engagement, which aligns perfectly with where enterprise software is moving. Of course, risks remain. The marketing technology space is highly competitive, large platforms could build overlapping capabilities, and data privacy regulations will always be a factor in identity-driven models. Profitability is still a work in progress, but the overall trend is clearly improving, which is what long-term investors look for. The second stock is Iren, a company many people still associate with cryptocurrency mining, even though its business model has evolved dramatically. Today, Iren is becoming a large-scale AI data center and high-performance computing infrastructure provider. The company builds power-dense facilities designed to handle AI training workloads, GPU cloud services, and enterprise computing demand. In the AI economy, electricity is essentially the new oil. The more power a company controls, the more computing capacity it can sell, and Iren is scaling rapidly on that front. Iren already operates hundreds of megawatts of capacity, with thousands more under development, placing it among the faster-growing digital infrastructure companies in the space. A major advantage is that much of its power comes from renewable energy, which is becoming increasingly important as governments and corporations push for cleaner operations, while AI energy demand explodes. What truly shifted the company's perception among investors was securing a massive AI cloud agreement with Microsoft, immediately repositioning Iren from a crypto-focused operator into a serious enterprise AI infrastructure provider. The company is now targeting hundreds of millions in recurring AI cloud revenue as GPU deployments scale over the next few years. Financially, revenue has surged, cash reserves have climbed close to $1 billion, and the company has moved into profitability, although investors should separate core operating performance from accounting effects related to asset values and capital structure. Heavy spending is expected because data centers are capital-intensive by nature, and there is dilution risk from debt financing, but this is common in fast-growing infrastructure businesses. The primary risk is execution and the assumption that AI demand continues rising at a strong pace. If AI growth slows, infrastructure providers feel it quickly. But if demand keeps accelerating, these assets become extremely valuable. Stepping back, Zeta represents the intelligence layer of the AI economy, helping companies monetize customers more efficiently, while Iren represents the physical compute and power layer that actually runs artificial intelligence systems. They operate in very different segments, yet both are benefiting from the same massive technological shift. Neither is risk-free, but both show real traction and improving fundamentals that many investors still underestimate. These aren't hype stories, they're early momentum businesses riding long-term trends. As always, do your own research and understand your risk tolerance before investing in anything. Let me know in the comments which business model you find more compelling: AI data intelligence like Zeta or AI infrastructure like Iren. If you found this breakdown helpful, hit the like button and subscribe for more grounded market analysis. I'll see you in the next video.